Guys, this is S&P 500 weekly technical analysis for the week of April 3rd, 2023. That is from 3rd of April, which is Monday, to 7th of April, that is Friday. So last week, everything was running smoothly as it was supposed to be, everything as per the technicals until Wednesday. So on Monday and Tuesday, it worked as was expected and predicted that any upward movement, it will not be reliable, and as soon as it moves up above or beyond 4,000, then it will become unstable and it will come down. So on Monday, it moved up, it came down. And then on Tuesday, further it came down. And this was the same thing that I mentioned in my previous S&P 500 weekly technical analysis. So it worked perfectly and it worked through the technicals on Monday and Tuesday. Now comes the Wednesday, Thursday and Friday. So on Wednesday, there came this an illogical movement, an illogical bullish movement, and this bullish movement was heavy, approximately 1.45% or 1.5%. Okay, first of all, there was a gap up open, and after the gap up open, then it started to move up, right? Now the question is that was it supported through the technicals? Absolutely not. Absolutely not. Because of the formation of these two candles on Monday and Tuesday, and secondly, the consecutive closing below the Ichimoku cloud, this was a clear sign of bearishness. Then the question is that why we have seen this the bullish movement out of nowhere. It just came out of nowhere. It was not anticipated. It was not expected. It just happened. And that is why we are going to call it as a manipulated movement, because it came out of nowhere. It was not expected. It was not anticipated. This was not through the technical. This was not through any news. This was not through any data, nothing. So the reason that was given to the market, what was the reason? That because nothing broke, which is why the stock market celebrated and moved up. This was the reason that was given. And this is the worst excuse that I have ever heard from the market manipulators. So this is the same thing that I mentioned to my YouTube community members, that if there comes no bad news for 10 to 12 days, then the S&P 500 will hit 5,000. And in 2 to 3 weeks, it will hit the 6,000. And this way, there will be absolutely no stopping. And every day, everyone will buy. Then the question is that who will sell and who is selling? Who exactly is fueling this rally? This clearly indicates that 100% it was a manipulated movement. Not just 100%, but 200% it was a manipulated movement. And now the entire stock market, it has entered, or I'm not saying 100%, I'm simply saying that it has entered almost into the short-term bullish trend. So this is the manipulated movement. What was the purpose? Why it was there at the first place, and where it is actually heading to, from where we are going to see a reversal, and how the things are going to unfold. So I'm going to cover each and everything in the S&P 500 weekly technical analysis. Now guys, we are going to discuss the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the quarterly chart, monthly chart, and the weekly chart. So why I am discussing the quarterly chart and the monthly chart that I generally, I don't do. The reason is that because of this very heavy manipulation, almost 3% or 2.8%, in just 3 days. So the technicals have changed significantly on the quarterly chart as well as on the monthly chart, and also then the weekly chart. That is why we need to consider, and that is why we need to talk about the quarterly chart, monthly chart along with the weekly chart. So this will give you an idea that where actually the S&P 500 is heading to. So this analysis will give you the broad picture, the big idea that in the next couple of months, where exactly, or means what exactly we can anticipate, or what exactly we can expect from the entire stock market, or in the case of S&P 500. So this is the big picture, right? Then comes the second point of the agenda of this S&P 500 weekly technical analysis. And in the second point of the agenda, I will talk about the S&P 500 support and resistance levels. So I will give you the support and resistance levels because now the S&P 500 has broke. This is the Ichimoku cloud, and it has entered into this the bullish side. So in the bullish side, where exactly we are anticipating this the movement. So I will tell you that why we are anticipating 4,150 or 160, 4160 or 4150. So guys, let me tell you that I am bullish or bearish as per my technicals. I do not speculate and I do not follow these the market manipulators. So the stock market, it came into existence or it came into picture to make the rich richer. It was never intended to make these other people, the retail traders, okay, richer. No. So the sole purpose of the stock market, okay, so when it was okay back there more than 100 or 150 years ago, okay, when it started. So the sole purpose was to get the money from the retail traders and to give the money to the rich people. Okay. Then comes the third point of the agenda of this S&P 500 weekly technical analysis. And the third point, it is the S&P 500 technical analysis on the daily chart. So we are going to see that how the technical indicators on the daily charts, these are technical indicators have changed, and how exactly it is going to impact the upcoming movement of the entire stock market. So this the technical analysis of the daily chart, okay, this will tell us what is going to happen in this technically, okay, in this the near future, whether the technicals are saturated or not, okay. And yes, there is one more thing, okay, very important thing, that we have seen this last 3 days we have seen very heavy movement. This heavy movement has caused a problem, and the problem is the saturation of the technical indicators. So when I will analyze this on the daily chart, then I will tell you that how the technical indicators have saturated, okay, and what is going to happen next. Then comes the fourth point of the agenda of this S&P 500 weekly technical analysis. And in this, the fourth part of the agenda, I will give you the probable movement technically. I will give you the probable movement from April 3rd, 2023, that is Monday, through April 7th, 2023, that is Friday. So I will tell you that technically what can happen, technically what is going to happen. Okay, and once again, guys, I'm not a market manipulator and I do not control the stock market, and I'm not involved in any kind of manipulation, which is why my technical analysis, it works perfectly for more than 80% of the times. Anyways, guys, there is one more thing, that this S&P 500 weekly technical analysis, it will be a bit lengthy, which is why I have made these the sections in this the S&P 500 weekly technical analysis. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. And whichever section you want to rewatch, you can rewatch, right? And guys, just one more thing, a disclaimer to this S&P 500 weekly technical analysis, that this S&P 500 weekly technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 weekly technical analysis is not about any kind of trade setups, which is why whether you are making 100% profits within a day or whether you are seeing 20-30% losses within a day, these profit and losses are all yours, because I do not know how exactly you are going to interpret my S&P 500 weekly technical analysis. So guys, now I'm going to begin with the first point of the agenda of this S&P 500 weekly technical analysis, and let's do the technical analysis on the quarterly, monthly and the weekly chart. Let's see what is happening in this the long term, and how the movement in last 3 days, the manipulated movement in last 3 days has changed the picture from bearish to bullish, or so-called bullish. Okay. Now guys, we are going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the quarterly chart, on the monthly chart and on the weekly chart. Okay, so let's see what is happening and what is about to happen in this the long term, right? So guys, this is the quarterly chart. Okay, let me write it down. Quarterly chart. Quarterly chart means that the one candle represents 1 quarter. 1 quarter means 3 months, okay, or 90 days. So if you look into this quarterly chart, what we can see here is that this particular candle that has formed for the first quarter of 2023, this candle is a bullish candle. Secondly, it has closed above all of the moving averages. Other than that, it is bullish through the Bollinger Bands, and also it is bullish through the Ichimoku cloud, right? So these three factors are saying that it is bullish. Now the only problem that is there, it is because of the MACD and the stochastic RSI. MACD is bearish. MACD is less than the signal, it is bearish, right? Secondly, at the same time, the stochastic RSI, the K channel is less than the D channel. Because the MACD is bearish, stochastic RSI is bearish. So in the long term, still, even though these three technical indicators are bullish, but because of this, the combination, okay, see, the whenever MACD and the stochastic RSI, okay, whenever they are aligned, okay, in a particular direction, then that particular direction, okay, it becomes the direction of that particular stock, index, or commodity. Okay, so this happens technically. So these two technical indicators have the potential or the power to override, some other technical indicators, right? Now, although it is bearish through the MACD and the stochastic RSI, okay, and this is simply going to cancel the bullish effect of the moving averages, Ichimoku cloud, and the Bollinger Bands. Okay, so this is going to give us a neutral signal, simply a neutral signal. Okay, not bearish, not bullish, a neutral signal. But this neutral signal will be counted as bearish because the MACD and the stochastic RSI are bearish. Okay, now in the next quarter, the quarter means the April, May, and June. Okay, these are 3 months. So if there comes even a small candle, okay, or a bullish candle, any kind of green candle, okay, or if there comes a small bearish candle, then also the stochastic RSI, okay, it can change. It can change from bearish to bullish. Once that happens, then then the big picture will simply signify this is the bullish trend. Okay, clearly this is the bullish trend, even though MACD will take some time. Okay, but even though, okay, it will signify a bullish trend. Okay, however, if there comes this is the bearish candle that, for example, okay, for a few weeks or for a month or so, 2 months, okay, it moves up, and then by the time of closing in the month of June, okay, if it comes down and if it closes, okay, like, okay, this a bearish candle, okay, a good bearish candle, in that case, this change, okay, in the stochastic RSI, it will not happen. Okay, and in that case, that will simply say that the upward movement, okay, it was just a lower high, and then, okay, it is means now it is going to come down, right? So the question is that whenever it comes down, it will come down to what level? It will come down to 3,500, sorry, 3,400 to 3,500, and this is through this the quarterly chart. Okay, quarterly chart numbers are big, okay, and this. Other than that, if we look into the volatility, then from the first quarter of 2020, okay, the volatility is very high, and then the volatility has further increased from the second quarter of the 2022, and still it is trading at these means like very high levels, right? So overall, what we have noticed is that on this the quarterly chart, okay, trend is neutral. Okay, neither bullish nor bearish. But because of the MACD and the stochastic RSI, neutral or a little bearish side. Okay, a little bearish side. Okay, neutral or a little bearish side. So whenever it gives up, okay, in few weeks, 1 month, 2 months, okay, this thing doesn't matter, or maybe like 1 quarter or so. Okay, whenever it gives up, then the target range is 3,400 to 3,500, and this is confirmed by this the quarterly chart. Okay. Other than that, okay, there is one more thing that I want to show you here. And this was the same thing that I mentioned to my YouTube community members yesterday, that the quarterly candle has formed bullish, but the quarterly technical indicators are 50-50. And we are seeing a retrace after heavy falls quarter-on-quarter basis. And this indicates that when the stock market moves up or the SP 500 moves up, okay, in the short-term bull trend, then it has chances to hit the golden resistance at 4291 and can even move up around 4,300, right? So why is that? The reason is that when we apply the Fibonacci retracement here, when we apply, okay, the Fibonacci retracement here, then approximately you will notice that the S&P 500, okay, it has moved up. Now it found the resistance, okay, at this the 50% level. There's a resistance at the 50% level, okay, that was 4155. Okay, again, remember that we are talking about a quarter. Quarter means the 3 months. Okay, January, February, and March. January, February, March. Okay, so we have seen that in the month of February, I guess Okay, there was this the upward movement and then it came down. So this the one candle, the quarterly candle is saying that it moved up. Okay, it hit the 4155, but it failed to breach this the 50% level of the Fibonacci retracement. What does that mean? This means that if there comes the next quarterly candle, okay, for the months of April, May, and June, if there comes a next quarterly candle, and if that quarterly candle again fails to clear this the 50% Fibonacci retracement level, in that case there will be two consecutive failures, and in that case, in the month, not month, but yes, month of 7th month will be July. Okay, July 2023. Okay. In July 2023 or in this third quarter of 2023, okay, we will see there is the reversal in the trend. Okay, because technically it will be seen as the two consecutive rejections, not failure, okay, exactly, but rejections, two consecutive rejections. Okay, so that will also be seen there. Now, other than that, same, okay, what we can see here, why I mentioned the golden resistance 4291 to my YouTube community members. The reason was that we have a 61.8% Fibonacci retracement level at 4310. Okay, so these are the approximate levels. 4291 is our golden resistance level. Okay, so let's say, okay, if it is able to breach this the 4155 50% this the Fibonacci retracement level, okay, in next coming weeks, okay, or in next 1 or 2 months, and when it moves up, then it will be heading towards what? Then it will be heading towards 4291. Okay, that is our calculated resistance level, and it can even breach up to 4310 or 4305 approximately. Okay, so you can say like plus 20 points, 20 or 25 points. Okay, so just keep this much buffer. Okay, now as soon as it hits, okay, around this this level, okay, this the 61.8% level, okay, then after immediate hit it will come down. Okay, this will happen after this is the immediate hit, right? Now once it comes down, then it will come down towards what? It will come down towards the 4155. If it is able to sustain and if it is able to move up again, okay, and in this quarter, okay, April, May, June, if it is able to close above 4310, in that case what will happen? In that case we will see that yes, now it has potential to move up further. Move up further means then in that case we will simply say that now it is going to gain its long-term bullish trend. Okay, and whatever we have seen here or the recent these the recession fears, okay, and that was indirectly confirmed by the Federal Reserve Chairman. So that recession, okay, it will not be there. Rather, we will simply say that this was the correction. Okay, now that the correction has happened, and after breaching and closing. See, okay, one more thing. I'm not talking about, okay, only this is a breach now. Okay, we always focus on this, the closing. So if you are subscribed to my YouTube channel, then we always focus on the closing. The closing must come above 4310 in the next quarter. Okay, then only this condition will be applicable. And once again, guys, I'm not speculating. I'm just telling you what technically is happening, can happen, okay, and how the technicals can change, okay, everything. So this is with this the quarterly chart, okay, the SP 500 technical analysis on the quarterly chart. Okay, now I hope this thing is clear, and this is very, very simple and plain chart. Okay, now let's see what is happening on the monthly chart. So we'll talk about this the monthly chart. Okay, quarterly chart is done. Let's see what the monthly chart is saying. So monthly chart, this is the monthly chart. Okay, monthly chart of S&P 500. Let me mention here the monthly chart of S&P 500. Okay, now on this the monthly chart, so yesterday I mentioned this thing to my YouTube community members that the monthly candle has formed bullish, and when we look through the monthly chart, then it looks like the stock market or the S&P 500 is in consolidation for last 5 months, and the range is from 4110 to 3750. However, on the weekly and daily chart, it is not under any consolidation. Anyways, the bullish candle on the monthly chart indicates an initial bullish movement in the coming week starting Monday. But again, we are talking about the monthly chart, which means the movement will not be that straightforward. These were the 5 months, okay, that I mentioned in my this is the community post, okay, that this looks like consolidation, okay, clearly. anyone can see, okay, that yes, it looks like consolidation. Okay, so what has happened? It moved up, came down, moved up, came down, moved up, and this the downward movement. Okay, it can happen, right? So if this truly is in the consolidation, okay, since November 2023 to 2022, okay, for last 5 months, then what will happen? In that case, okay, let me just enhance this the picture so that everyone can see it clearly. Okay, just a second. Now I hope that now you can see, okay, this thing clearly. I'm talking about this thing. Okay, these 1, 2, 3, 4, 5 candles. Okay, and this is the monthly chart. Monthly chart means that the one candle represents 1 month, right? So first, okay, it was an this upward move, okay, in the month of November, then downward movement in the month of December, then again an upward movement in the month of January, then a downward movement in the month of February, then an upward movement in the month of March recently. Okay, now let's see whether the S&P 500 will be break. Okay, this is the so-called consolidation on the monthly chart. And remember, guys, when I say consolidation, it can happen, okay, quarterly chart, monthly chart, weekly chart, daily chart, okay, and sometimes we also consider, okay, or we see it on the 4-hourly chart, okay, but anything below the daily chart, okay, it is not considered, okay, but technically, okay, to get the precise movement, okay, we consider, okay, sometimes the 4-hourly charts also, okay. So now if there comes in the next quarter, if there comes, okay, this the movement, okay, a bearish movement. Let see, as of now, what we know is that on Monday, okay, Monday onwards, we can expect, okay, this is the bullish movement, okay, but this bullish movement will be subjective. That I'm going to talk about in the 5th point of the agenda of this S&P 500 weekly technical analysis. So I will give you the probable movement there. So I will talk about, okay, this is the Monday bullish movement and then intraday fall, etc., etc. Okay. So as of now, it will move up. Okay, and if it is able to close, again, I'm talking about close. If it is able to close above this 4150 or 60, okay, in the month of April, by the end of April, in that case, we will say that yes, now there is a kind of breakout, okay, of this the consolidation, okay, that was there for 5 months, and then in the month of May, okay, we can further expect this the upward movement, this the bullish movement, okay. In that case, the bullish movement can be expected up to what? So we have used the Fibonacci retracement on the weekly chart, on the quarterly chart, and when we apply the same here, okay, in that case 4,300 we are seeing here for, yes, as of now 4,300, because after 4,300 it will be 4,500, okay. Let's see whether it will be able to to break, okay, this, or to give, okay, a breakout from this a consolidation. But remember, this must happen by the end of April. If this is so if this is happening like in the mid of April, okay, or before the closing of the April month, you are seeing that it is moving up, or around, it is around 4,200, okay. But when the month is about to close, okay, when the month is about to close, then all of a sudden in last 1 or 2 days it comes down and it close back below what we say like 4,100 or 4,110. In that case, okay, the consolidation breakout of, from this so-called consolidation, it will fail, and then again it will be in this the consolidation, means in that case we will see, okay, some again up down. Yep. So there is one more thing that I forgot to mention here. To those who are new to the technical trading or new to the stock market, consolidation means that the particular stock or an index like S&P 500, okay, or any commodity or anything, okay, during the consolidation, it simply oscillates between two levels. Up, down, okay, that's it, okay. So this is how the consolidation works. Sometimes you will see that it is breaching or it has breached this the upper level. That's fine. That's not a problem. Okay. But the breakout actually comes when the closing comes above, okay, these the levels, or below, okay, these the levels. Then only the breakout is considered, right? So now this picture is here clear. Now technically, let me tell you, okay, what changes we are seeing here. Yes, okay, for now it is bullish through the moving averages, bullish through the Ichimoku cloud, bearish through the Bollinger Bands. Bearish through the Bollinger Bands, right? Then it is bearish through the MACD and it is bullish through the stochastic RSI. Again, the mixed results, okay. So not exactly 50-50, okay, but I will say 1, 2, 3. So I will say like 60-40. 60-40, okay. 60% bullish, 60% bullish, 40% bearish, okay, on the monthly chart. What we have seen on this the quarterly chart, 50-50, okay, 50% bullish, 50% bearish. On the monthly chart we are seeing 60% bullish and 40% bearish. And I guess I have mentioned here also the monthly chart indicates that the stock market or the SP 500 has chances to hit or retest 4150 to 4160, okay. So on the quarterly chart we have seen that the target levels are around 4300. On the monthly chart we are seeing that the target level, okay, it is 4150 and 4160, okay. So the target levels are there, okay, these things. Now yes, now there is one more thing on this, the monthly chart, okay. So historically, okay, when we look into, okay, this kind of movement, then it says that this time it came down, fine, it got a reversal, fine, but there was something that was supposed to happen and that has not happened. Okay, what was that? That was, it was supposed to respect the Ichimoku cloud, okay. Means it was supposed to come down and hit the Ichimoku cloud somewhere around 3400, 3500 or so. This means that in the month of April, okay, it is 3300. In the month of May, it is 3400. In the month of June, it is 3400, 500 or so, okay. So this means that if we consider this the quarterly chart and failure through the quarterly chart, then on the monthly chart in the month of, and means anytime April, May or June, okay, we will be seeing that the S&P 500 is coming down back to retest the 3400 and 3500, and this is the same thing I mentioned on the quarterly chart, okay. So technically it is there. If we are talking about the 4300, then we should also talk about, okay, technically whatever technical is possible, okay, here in this the bearish side, and that is 3400 to 3500, okay. So that is why, okay, I say that do not trust the market manipulators blindly, and do not just fall into their trap because they are giving you this 10%, 20%, or 1 or 2 days or 3 days profits, okay, because eventually their goal is to get the money from you, okay, all of it, whatever you have made profits as well as your own money. And now let's talk about this the weekly chart, okay. So we have decoded the quarterly chart, we have decoded the monthly chart of the S&P 500. Now let's see what is happening on the weekly chart of the S&P 500. For that, let's change everything to the weekly basis, okay. Now on the weekly chart, okay, we can see a movement, that there is a movement on the weekly chart, okay. We are seeing a movement, right? So I mentioned this thing to my YouTube community members yesterday. Today the weekly candle has formed bullish and the technical story has changed here. Actually, yes, actually it was the weekly chart, okay, where something drastically had changed, okay. And this was changed on purpose, okay, yeah. And that was because of the formation of the bullish weekly candle. The bullish moving averages, which were otherwise supposed to give a bearish cover, are now not giving bearish crossover. Yes, bearish crossover are now not giving any bearish crossover. Rather, there is a bullish slip in the moving averages on the weekly chart. And this bullish slip indicating a bullish move or bullish movement in the stock market or in the S&P 500 and supporting a short-term bullish trend. The MACD, which went bearish last week, has changed to bullish. Stochastic RSI that went bearish last week has changed to bullish. All of the technical indicators are aligned bullish on the weekly chart except the Ichimoku cloud, right? Now let's see this thing in action. So when you look into this thing clearly, candle first, okay, when we talk about the candle, a heavy bullish candle and the close is almost equal to the high, indicating bullish sentiments in the stock market, entire stock market, not just in the S&P 500 but in the entire stock market, okay, and indicating a gap up open or a bullish open or a bullish movement initially on Monday, okay, as simple as that. Now when we look into technically what has changed, okay, yes, here stochastic RSI changed from bearish to bullish, MACD changed from bearish to bullish. Yes, stochastic RSI it can change, not a problem, but MACD generally, okay, such like this kind of thing, okay, within a week. Last week, okay, it was bearish. Last week it was bearish, and it takes 3 to 4 weeks. Technically, it takes 3 to 4 weeks, okay, or about a month. When the MACD on the weekly chart, okay, it changes from bearish to bullish or from bullish to bearish, okay. But because of this, the very heavy, extremely heavy manipulated bullish movement in just 3 days, Wednesday, Thursday, and Friday. Okay, the market manipulators, they were able to manipulate, or they were able to change the technical indicators. Okay, and it was such a heavy manipulation that has forced the MACD to give a reversal just, okay, means the next week itself. Okay, which was otherwise technically, whenever you analyze a weekly chart, then like once in a year, not year, okay, once in a few years, okay, you will notice that something has, okay, something like this has happened, okay, otherwise you will never ever see that this thing has happened, right? So guys, again, I'm a technical analyst. I look into everything, okay, technically. I do the data analysis. I also analyze, okay, this the government data, okay, that comes, okay, and then I apply that to my the technical indicators and to everything, okay, and accordingly I give, okay, this the predictions. And whenever the market is not manipulated, then you will find that my predictions are very, very accurate, okay, like more than 90%, or sometimes even 95 to 99%. Anyways, on this the weekly chart, okay, the point of concern for the bears and the point of relief to the bulls, okay, is actually the slip that has formed in the moving averages. So last week I mentioned this thing that now even if there comes a small candle, okay, green candle, red candle, doesn't matter, but a thin candle or a bearish candle, then 100% there will be a crossover in the moving averages. Okay, and technically there was no bullish movement plan, no bullish movement can happen technically, no technical indicators, no data analysis is supporting that, okay, this particular part. Okay, so now, because that has not happened, a crossover has not happened, rather one moving average has slipped over the other moving average. Okay, and once again, if you have subscribed to my YouTube channel for last many months or years, okay, then you have seen this thing. Okay, so what actually it does? Okay, whenever there comes a slip simply confirms, okay, 100%, okay, kind of that thing, okay, or it simply confirms that whatever was the trend as per the moving averages. And remember guys, I'm not saying that the actual trend, okay, supported by the all of these technical indicators. No, I'm simply saying that whatever was that trend supported by the moving averages, in this case this was the bullish trend, okay, that trend will continue, as simple as that. Okay, and its heavy impact will be seen immediately. Immediately means Monday, the coming Monday. Okay, that is what the slip says. So one of the purpose of these market manipulators to manipulate heavily, very, very heavily, was to change the technicals from bearish to bullish. Otherwise that was not possible. That was not possible, okay, as such. Rather there was heavy bearish the movement, okay, that was supposed to happen technically, okay. But this, okay, in last 3 days, okay, this has happened. Now the technical indicators have changed, right? So everything is bullish. What is not bullish? That is the question on the weekly chart. What is not bullish? It is the Ichimoku cloud that is not bullish. Ichimoku cloud as of now is neutral, and as of now the the S&P 500, okay, it is trading inside the Ichimoku cloud. Whenever there comes any movement that happens inside the Ichimoku cloud, that movement, okay, it cannot be trusted. Okay, it might look bullish, but in actual, okay, it may be like bearish, or it might look like bearish, but in actual, okay, it will be like bullish. Okay, so means whatever is the movement in the cloud or it is happening inside the Ichimoku cloud, okay, it cannot be trusted as such. However, there is this the one thing, okay, that we need to notice. If you look into this, the upper, so yeah, this is the next week, right? This will be the next week. If you look into this, the upper boundary or upper band of the Ichimoku cloud, then it is at 4155. 4155. Okay, and what we have noticed on the monthly chart, again the same, 4150 to 4160, and also quarterly chart, okay, the 50% Fibonacci retracement was the same. So again and again we are getting the same reading 4150, 4160. Okay, this means that yes, now there are very good chances, very good chances that S&P 500 is going to hit 4150 to 4160. Okay, now what happens after hitting 415060? That's a different story. That's a different thing. Okay, and that is not that straightforward. So I will talk about that what happens after 415060, okay, in the last point of the agenda of this S&P 500 weekly technical analysis, and I will tell you in the probable movement that what can happen, okay, what is going to happen, etc. As of now, so Ichimoku cloud itself is saying that now the 4150 it is going to act as this the resistance, okay, and it is again a potential target. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you're looking for these the daily analysis, the daily updates of the S&P 500, and not just the updates, but minimum 5 to 10 stock market opportunities every week, minimum 5 to 10 stock market opportunities every week. In that case, you can join my YouTube community, and I've given the link in the description of the video and also in the comment section. So guys, now we have seen that what is happening and what has happened and how the technicals have changed, what the technicals are indicating on this, okay, this like this, the quarterly chart, okay, monthly chart and the weekly chart. Now let's move on to the second point of the agenda of this S&P 500 weekly technical analysis. And that the second point of the agenda is what? It is the support and resistance levels for the S&P 500. Now guys, we are here and this is the second point of the agenda of this S&P 500 weekly technical analysis. And here we are going to talk about the support and resistance levels for the S&P 500. Okay, so let's see what support and resistance levels are going to work for the S&P 500 in the coming week. So at first we can notice that the S&P 500, it has closed at 4109, approximately 4109. Okay, so as of now we can say that the immediate, okay, resistance that is there in the picture, okay, it is 4100, 4100 to 4110. Okay, so this is okay, this was something that has earlier acted as a very strong support as well as very strong resistance, okay, as per the movement of the S&P 500. Okay, this is the immediate resistance. However, because we are anticipating a gap up open or a bullish open, okay, on Monday, or a bullish movement on Monday, this means that when that happens, then there is a little kind of vacuum, you can say, in between these two levels, okay, two levels or zones. So the next one that comes here is 4150 to 4160, 4160. Okay, so now in the first point of the agenda of this S&P 500 weekly technical analysis, okay, I have given you the technical reasons on the quarterly chart, monthly chart and the weekly chart, that why this particular 4150 and 4160 is important. Okay, because of the Ichimoku, because of the moving averages. Means there are multiple technical factors that are supporting a movement up to 4150 to 4160. Okay, so we can say that the actual resistance that we are anticipating, okay, that actual resistance we will see, okay, from 4150 to 4160. Okay, and again, it is not necessary that the S&P 500 has to hit these the exact numbers. So rather than hitting the exact numbers, okay, on Monday, the S&P 500 can come down, okay, like from this 4130, 4135. Okay, the reason is that on the lower level charts, okay, like 1 hourly chart, 4 hourly chart, the S&P 500 is heavily saturated. Okay, this means that although we are anticipating this the upward movement, so that upward movement, okay, it will be limited. It will be limited, right? Or at most we know that even if there comes an unlimited upward movement, then also on Monday it will be the 4150 and 4160, right? So I'm going to talk about more, okay, on this part in the probable movement, okay, section. That is the last point of the agenda of this S&P 500 weekly technical analysis, right? So as of now, 415060, okay, this the up down will happen, but still we have the 415060. 4160, right? Now after 4150, 4160, after breaching the 50% of the Fibonacci retracement level, then it can move towards 4185. This is what? This is 4185 to 4195. 4185 to 4195. Okay, this will be then the next resistance level. Okay, so then means later in the week. Okay, I'm not saying that on Monday it will be able to move up. Okay, although last 3 days were manipulated, so on Monday initially also, okay, it will be manipulated, and we are anticipating a profit booking on Monday. Okay, so on maybe like Tuesday, Wednesday, Thursday, okay, or some other week, if it is able to move up, if it is able to breach 4150, 4160, then it will move towards, okay, these are the levels. Then we have 4235, 4235, and then finally we have 4291. Okay, so next week a movement from these levels to 4291, that is like more than 4%. Okay, and because the manipulated movement was already approximately 3%. Okay, so from 3% manipulation plus 4% manipulation, no, as of now, okay, this doesn't seem, okay, like possible. Okay, that back to back like 7% manipulated movement, and it was moving up and daily up. Okay, so manipulation, yes, it can be acceptable if it happens to 41 up to 415060 and a little bit to like 4185. Okay, but as of now it is already trading at the saturated levels. Okay, extremely heavy technicals. Okay, so it needs a break. A break is there, and the break will be there. Okay, we will see a break. Okay, a good break. So it will come down, and then only it will be able to move up. Now it depends that when exactly it is going to come down, to what levels it is going to come down, and then only we can say that how much time will it take to move towards, and then whether it will be able to breach 4160 or 4185 or, okay, these levels or not. Okay, anyways, so these are the resistance levels. So we will talk about the probable movement in the last part anyways. So then yes, support part. As of now, the immediate support is at 4065. 4065. Okay, that is the immediate support, 4065. Let me write it down, 4065. Then comes the 4035. 4035 is next. And this the zone of 4035 is such a heavy zone that it was again and again respected and re-respected. Okay, so what does this mean? Okay, so yes, so this means that the S&P 500, okay, it has some good chances to retrace back to 4065, then to hit the Ichimoku cloud, and then to come back to 4035 zone. Okay, now because it is trading above the zone of 4035, so as long as it holds above the zone of 4035, it is expected to remain bullish. Okay, because anything below 4035, okay, that will simply make it bearish. Okay, or that will simply, throw it back to the bearish side. But we also need to talk about these support levels in the bearish side. Okay, and the reason is that this movement in last 3 days, this was not a technical movement. Okay, if there would have been a technical movement, then a reversal was supposed to be limited. Okay, means a fall was supposed to be limited, very limited. Okay, however, because this was the manipulated movement, that is why, okay, as of now, it is not that easy to comment that whenever there comes a reversal, okay, to what levels, okay, that can happen. But as per my knowledge and understanding of the stock market and the research, okay, I have seen this again and again that whenever the S&P 500 or the Dow Jones or the Nasdaq or maybe like the ETFs like QQQ, etc. Okay, or whenever the stock market is manipulated, okay, then what happens that after some times, okay, once the manipulation is over, okay, once they have fully trapped the retail traders, okay, then what will happen, then after some time, it might take 2 to 3 days or a week or so, okay, after some times or after a few days, the particular stock or the stock market or the index like S&P 500, okay, will come back to the levels from where it was manipulated. As simple as that. Okay, in this case, what was that level? That level was 3970. Okay, not exactly 397, that was 3960, I guess. Okay, so this means that because of the manipulated movement, we need to cover this. Okay, this the support in this the bearish side also. Okay, so we have 4035, then we have 4007, 4007. Then we have 3991. 3991 is very, very good. Okay, this is the support. Then we have the boundary of the Ichimoku itself, and the boundary of the Ichimoku is 3980. 3980 is the boundary of the Ichimoku. Okay, and I think that whenever there comes a very heavy fall or any fall, okay, any reversal, as per the theory of the manipulation, in that case 3980, okay, it will be or it should be able to handle that fall. Okay, then we have 3960, and finally we have 3937 zone. So in the coming week, I'm not anticipating that it will fall by that much. Now guys, I have this one more important information to share with you, and this is regarding how you can join my YouTube community in order to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the stock market opportunities, minimum 5 to 10 opportunities every week. So what you need to do is that you need to visit my YouTube channel page, and I have given the link in the description of the video and also in the comment section. So once you visit my YouTube channel page, then you will see this the join button, JOIN join button. And when you click on this the join button, then there will be these the two options. The first one is the daily S&P 500 updates. This means that you will get the daily updates, the daily analysis, the daily updates from Monday through Friday, each and everything. And the other one is the updates and opportunities. So the updates and opportunities means that you will get the daily analysis, the daily updates of the S&P 500 from Monday through Friday as usual. Plus you will get the opportunities, the stock market opportunities, minimum 5 to 10 stock market opportunities every week. It's not every month, it's every week, minimum 5 to 10. So the opportunity means that I analyze the premium stocks and I give them as an opportunity to you. And if you notice that many people have joined my YouTube community for last many months, and it's almost about 1 year since I've opened this service. So guys, whenever you want to join my YouTube community, you can use either of these two options, and you can join through this the join button. And guys, there is one more thing, that once you have joined my YouTube community, then you need to visit my channel page, and you will find the community tab. All of the updates, every analysis, it is there in the community tab only. And if you are using YouTube mobile app, then you will get the update in the mobile app, and you will also get the notifications in your YouTube mobile app. So guys, once again, I have given the link in the description of the video and also in the comment section. You can use that link in order to join my YouTube community. So now guys, we are going to talk about the third point of the agenda of this S&P 500 weekly technical analysis. And the third point of the agenda is S&P 500 technical analysis on the daily chart. So in the first point of the agenda, what we did the S&P 500 technical analysis on the quarterly chart, monthly chart, and the weekly chart. Okay, so now we know that what is happening or what they are trying to achieve, right? Anyways, now on this the daily chart, let's see what is happening in the short term. Okay, what the short term technicals are saying. So when you look into this, the candle, okay, the candle is, it is a heavy bullish candle. The open of the candle was the low, okay, and the closing was almost the high. This indicates that there are bullish sentiments. There were bullish sentiments at the time of closing of the candle. This indicates that the same bullish sentiments are expected to be carried forward to Monday upon open, means initially upon open, and we can also expect a gap up open, or irrespective of any open, okay, an upward movement or a bullish movement. But there is only this the one problem, and that the problem is that this was not a technical candle. Okay, this was not the technical movement, and this was not the technical candle, which is why, okay, this the gap up open, or this the initial upward movement, okay, through any open. So that is all okay, although that is expected, but that is not 100% confirmed. If the same would have been the technical movement, then that was like 100% confirmed. Okay, but because this was a manipulated movement, so we don't know, okay, that whether the market manipulators, whether they are going to dump immediately upon open, or whether they will go for the profit booking. The technical indicators, first comes the Bollinger Bands. Because the S&P 500 is above the median of the Bollinger Band and also above the upper band of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands as well as saturated. Okay. Then comes the moving averages. Confirmed crossover in the moving averages. It has happened on Thursday itself. Okay, the crossover. So confirmed crossover in the moving averages. Secondly, the S&P 500 has closed above the moving averages. This means that the S&P 500 is clearly bullish through the moving averages. Then comes the Ichimoku cloud. So finally, the S&P 500, it was able to close above the Ichimoku cloud on Friday. This means that S&P 500 is bullish through the Ichimoku cloud. Now comes some other technical indicators. So we have the MACD. MACD is more than the signal. MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. Then comes the stochastic RSI. K channel is more than the D channel. This means that the stochastic RSI, or the S&P 500 is clearly bullish through the stochastic RSI as well as saturated, because the K channel is 100. And then the volatility is normal or is moving up, and the divergence is fine. Everything else looks good. This means that the S&P 500 on the daily chart is 100% bullish, absolute bullish as well as saturated. Bullish and saturated, right? So what does this mean, the bullish and saturated? Okay, this means that it is bullish, it is expected to remain bullish, but in order to come out of the saturation, okay, it has to give a bearish movement, okay, and then the technicals, okay, will be out of the saturation, and then it can again resume its bullish trend. That's it. Guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. You can use that link in order to join my YouTube community. Guys, now let's move on to the next point or next part. Okay, and that is the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And the last point of the agenda of this weekly technical analysis is the probable movement of the S&P 500 in the coming week, that is from April 3rd, that is Monday, okay, to April 7th, which is Friday. So guys, now let's talk about, okay, a few things that you must know and you must understand. The very first thing is that the next month, so not the next month, the April month, okay, in the month of April, the FOMC, okay, the Federal Open Market Committee, so the FOMC, okay, meeting, okay, it will not be there, means there will be no rate hikes in the month of April, okay, and the retail traders who are happy with this, the news that there will not be any more rate hikes, okay, that is absolutely false, and you need to correct yourself, okay, and you should not, trust the market manipulators blindly. So what they have not cleared, okay, is the point that the FOMC meeting, it will not happen in the month of April. Okay, and this is nothing new. These are the planned meetings. Okay, this is a calendar and every calendar, okay, it is fixed that when the meeting will take place and when the meeting will not. So the only reason why there will not be a rate hike in the month of April will be that there is no meeting of the FOMC, Federal Open Market Committee. Okay, otherwise there is no reason. So no need to be to be that much happy, or no need to celebrate that the Feds have stopped raising the interest rates, as the market manipulators, okay, are publishing through all of these the media, or all of these these the news channels, or these the platforms now. That is one part. Now the other thing is the earnings. Okay, the earnings of the companies. So the first month of every quarter, okay, the companies, they post their earnings. Okay, so whenever the earnings comes into the picture, the volatility, okay, it increases, and the volatility in particularly in this the earnings season, okay, it favors the bulls. Okay, bullish market. Okay, and the volatility, it becomes like very high. Okay, or it goes to these the highest levels when the giants means like Apple or Amazon or Google, Microsoft. So these are the tech companies, and then the non-tech companies, we have the HD, Home Depot. Then we have UNH, United Healthcare. Okay, then we have GS, Goldman Sachs. Then we have JP Morgan. Okay, so we have some non-tech companies, and that is why, okay, we count this the Dow Jones. Okay, so this the Nasdaq is almost a purely like tech. Okay, only tech. Okay, SP500 is mixed of tech and the other companies. Okay, but it gives heavy weightage to the tech companies. That is why you will notice that whenever there comes very heavy movement in Apple or Microsoft or Google or Amazon, then we see very heavy movement in the S&P 500 as well as in the Nasdaq. However, we do not see such movement in the Dow Jones, because Dow Jones, it has all of these the companies from all of these the sectors, and everything is balanced. Okay, which is why you will never see that if the Apple is 5% up, then the Dow Jones is 5% up. No, the Dow Jones may be up like 0.8%, 1% maybe, okay, or 0.5%, but the S&P 500 will be 2% up or more, and the Nasdaq will be again 4 to 5% up. Okay, so that is the earnings here. So FOMC, okay, no rate hike in the month of April are relief for the bulls. Earnings, okay, always favored okay, this the bull market, or this the bullish market. Okay, now comes Friday. This particular Friday will be 7th of April. On the 7th of April, the non-farm payroll data will be published. Okay, in the month of January, it was exceptional, more than 3 times, okay, expected. In the month of February, it came down, but not significantly, and not as per the expectations of the Wall Street, okay, or the market movers. So again, we need to see, okay, whether the NFP data, it will be like better than expected or in line. If the NFP data, it comes less than expected, okay, means in line or as per the expectations of the Wall Street, then definitely, okay, bullish movement will be there. Okay, and if it comes like more than anticipated, more than even the previous one, so this will be bad. In that case, the entire stock market, okay, it can react bearish, right? But yes, that bearish will be limited, or is expected to be limited, because the entire stock market, okay, is in the celebrations mode. Okay, and the entire stock market, okay, is not looking into any kind of negative news, and is not reacting to negative news, or is not just the negative news, okay, but to like any neutral news. So any positive or the neutral news is positive, any negative news is like neutral, simple. Okay, so this is because of this is happening now, guys. Once again, if you think that as of now the S&P 500 is going back to 4,500, 4,900 on 6,000 or so, and it has turned bullish, then absolutely not. Okay, it is moving up fine. Okay, let it move up, but it is not in the long-term bull trend. It is not. Okay, because for the long-term bull trend to happen, many conditions must meet. Okay, and not just in the S&P 500, but in the Dow Jones at the same time. Okay, and this is the same thing that I warned you earlier about. Okay, the same thing that when when the entire stock market, okay, it was celebrating, and when the market movers, okay, and these are retail traders were saying that it is bullish, and I mentioned that no, it is bullish in the short term bullish, but it is not long term bullish, and that it is moving up just to form a lower high. Okay, so no need to celebrate. You are celebrating, okay, just for this a short term, and eventually, okay, it will fall. Well, that was a trap, okay, that was formed to the Dow Jones. Okay. Anyway, so a lot of things before we can call it as like this, the long-term bullish trend, okay, towards 5,000 or 6,000. Okay. So for now, that is not there. Okay. The bullish and the bearish movement, that's fine. Okay. It happens. Sometimes bullish, sometimes bearish. But a long-term bullish or a long-term bearish means recession, okay, or correction. So these two are some significant or the events that you cannot say, because there was, like, 3 days there was manipulated movement. Okay, so based on this, you cannot say that the entire economy is heading into this a long-term bullish trend. Okay, no. Okay, that is not the case, right? So these are the important things, okay, that you must remember. And yes, there is one more thing. As per the concept of the manipulation, okay, that what we have seen, whenever the stock market is manipulated, or any index is manipulated, or any stock is manipulated, then after some time, okay, it may take like 2 to 4 days, or maybe a week or two. Okay, after some time, the stock market or the index, it comes back to the levels from where it was manipulated. Okay, in this case, this is 3970, 3980. Okay, so these 4 things, I guess, okay, these 4 things are clear. Now comes the next important thing. The next important thing is the profit booking. Profit booking. Okay, what is profit booking? So see, this was a manipulated move. Okay, this is clear, and we all know, okay, that this was a manipulated move, and there was no proper excuse, rather a lame excuse, that because nothing broke in the stock market, that is why the stock market is celebrating and it is up by 1.5%. Okay. Absolutely rubbish. Now we were talking about the profit booking. Profit booking is that because they have manipulated, okay, and it was like 3% up in 3 days, 3% up, right? And as of now, technically it is saturated. So technicals are calling for this, some kind of a cool down. Okay, technicals want the S&P 500 to cool down, not just the S&P 500, but also the Dow Jones to cool down. Okay, what it means? This means that now the market manipulators, okay, they can try for the profit booking. And the same thing I mentioned in my final update to my YouTube community members yesterday, that we can expect a profit booking, that the profit booking can, okay, or it will take place. Bullish profit booking. Okay. So what is this, the profit booking exactly? So now there was a lot of buying, and the retail traders, they are perfectly aligned bullish. This means that they are going to buy Monday. Okay, no matter what. Okay, they will be buying. Okay, this means that because of this, the candle that has formed. Okay, we are already anticipating a gap up open, or irrespective of any open, a bullish movement on Monday, right? And guys, once again, 100% this is not confirmed that there will be a gap up open, or irrespective of any open, there will be the bullish movement. Okay, why this is not 100% confirmed? Because this was not a technical move. If this would have been a technical move, then 100% confirmed. Because they have designed this the bullish move. Okay, so they will define that what will happen on Monday. So now, for the profit booking to happen, what must happen? For the profit booking to happen, there must come a gap up open, and if not gap up open, then almost a flat open, and just after the flat open, a bullish movement. Initially after open, or initially after any kind of open, a bullish movement should be there. Okay, we are talking about the bullish profit booking. Okay, it should be there. As of now, looks like that yes, that can be there. Okay, because the retail traders, okay, they are aligned bullish. Okay, so when that happens, then what will happen? In that case, the S&P 500, it will move up. Okay, now as soon as it is started to move up, the technical traders, okay, they will catch, and or they're already aware of. Okay, then immediately, okay, they will catch this thing that now it is highly unstable, heavily unstable. Okay, this means that now anytime it can give up. But the retail traders, okay, who are there to buy, okay, they might not see this thing and they will participate in buying. Okay, they will buy. So because of that, what will happen? Initially, this upward movement, it will look like as if it is moving up. Yes, everyone can see that yes, it is moving up. Looks like it is moving up. Okay, for some time of for some time like 10 minutes, 15 minutes, half an hour, you will see that it is trying to move up or it is trying to hold. It is trying to move up or it is trying to hold. Okay, that will further convince those who were in wait and watch mode. Okay, so now they will also participate. So when more and more people participate, means there will be a lot of volume, a lot of volume. Okay, now that the volume is there, the upward movement is there, and it has like almost hit 4135. Okay, or like this the 4150 or so. Okay, now that is the time, because the technicals are already saturated. This is what we know, that the technical indicators are already saturated at the point and are indicating a cool down, okay, or a reversal. Okay, so around 4135 or 4150, then what will happen? Then all of a sudden, okay, this thing generally it happens suddenly. Okay, sometimes it happens okay slowly. Then all of a sudden you will see that it came down, some kind of selling. Okay, came down but hold, and then it again started to move up. This will further convince those who were again in the wait and watch mode. Okay, who were a little bit a little more we can say, yeah, some clever people. Okay. Now they will be convinced that although means it moves that it moved up, it came down a little bit. Okay, but again it moved up. This means that yes, it is going bullish. So this is how okay, most of these the retail traders, they analyze the things. Okay, so now they will see this thing. Now again the upward movement, okay, on this day, technically intraday technicals, they will be super saturated. 1 hourly chart, 4 hourly chart, super saturated. Okay, and the daily chart will also be saturated. This means that the technicals will pull. The technicals will pull and the technicals will not force the SP 500 to move up. This means that the technical traders, particularly the technical traders, they will not participate. This is the time when they will not participate, the technical traders. They will be out from that trading. Okay, only the market movers, the market manipulators, and the retail traders will participate, but not the technical traders. Okay, so now the technical traders will wait for it to show the signs of like some kind of a struggle around these the resistance levels. Okay, then the technical traders, they will take the short positions here. Okay, now the market manipulators, they are already they are very well aware about this thing. Okay, so now the technical traders are they are bearish. Market movers, okay, they already have a lot of volume. Then there will come the the trend. Okay, not actually that trend, no, not the trend, but the movement. Okay, then there will be the movement. Now with this movement, we will see now slowly or all of a sudden the S&P 500 and the entire stock market is coming down. Now whenever it comes down, at first it will try to find support at 4110 or 4100, and when it breaches, then it will further come down to 4065. Okay, yeah, we are talking about Monday. 4065, and then to the 4035 zone. See, if this would have been a technical movement, then we would have expected a retrace up to 4065 at most, or around 4100. Okay, but because of manipulated movement, okay, we must also consider 4035 zone. Okay, that will again will be there in the picture, right? And then what will happen? Everyone who has went bullish on Monday, particularly on Monday, okay, seeing that it is moving up, okay, these are retail traders, they are going to see a very heavy losses. Whatever they have made money here, they are going to lose that money. Okay, and other than that, whosoever have not yet booked their profits, thinking that they will make more profits, okay, again their profits will be minimized, or it will simply change into these the losses. Okay, so this thing will happen. So this is on Monday. Now there is one more reason that why it should come down on Monday. Okay, And yes, guys, so this is what we call as the profit booking. Okay, that is one thing. Now there is one more thing that I want to show you here, and yeah, this is the Dow Jones. This is the Dow Jones. If you look into this, the Dow Jones, okay, we have saturated stochastic RSI, highly saturated. Okay, on Monday it will be very heavily saturated. Okay, very extremely. Okay, this is a rare event. Okay, uh, in this case. Other than that, the Dow Jones, okay, we can see that the Dow Jones is moving up and it is about to hit the Ichimoku cloud on Monday. Okay, and when we calculate this, the movement here, then it is like 0.64%, 0.60%. Okay, 0.60% movement in the Dow Jones is approximately 1% or 1.25% movement in the S&P 500, or anything above 0.60%, right? And then it is around 2% or 1.5 or 2% movement in the Nasdaq. Okay, this is how it works. Okay, so the Dow Jones is going to hit its resistance level. Okay, here. Okay, this is the mark. Other than that, there we have this the Ichimoku cloud. In case of the Dow futures are already saturated. Okay, so everything as of now is technically saturated. The Dow futures have, I guess, very little movement, only 0.40%. So 0.40%, okay, Dow futures. Dow futures are much more saturated as compared to the Dow Jones and the S&P 500. And then there is a problem. Okay, that says that although we are anticipating a profit booking on Monday, okay, this profit booking may not happen if there comes a good gap down open. If there comes a good gap down open, why we can see a gap, a good gap down open? Okay, what actually is going to cause this the good gap down open? The reason is the Dow futures. Okay, the futures are already saturated, very much saturated, and the futures are around there. This is the critical mark. Okay, this means that because the futures will open like 12 hours before or 15 hours before the open of the American stock market. So in that 12 or 15 hours, the futures can try to move up and then it can come down. Okay, so by the time the American market opens, we can see that it moved up, hit, and now it is coming down. It has come down significantly. Okay, because if that happens, if there is a red candle by the time American stock market opens on Monday, then what will happen? Then a gap down open will be there. A gap down open will be there. That gap down open will then not allow this the profit booking. In that case, what will happen? In that case, the movement will change. The entire movement, it will change. So in case of the gap down open, let's say there comes a gap down open around here, 4090 or 4080. Okay. So this means that now for the profit booking to happen, the market manipulator, they first push this, the S&P 500, okay, upward, means with some good money. Okay. But at the same time, because there will be this the gap down open, okay, and the retail traders, okay, there is this the small, okay, there's a problem with the retail traders. They panic immediately. Okay, if they, so most of the time, okay, they are looking into the 1 minute candle or 5 minutes candle. So they panic, immediately. Now, so what will happen that because there will be, this is the gap down open. Okay, means that whosoever has bought around these levels at the time of closing, okay, now there is a red candle, okay, maybe like 0.2 minus 0.20% movement or minus 0.50% movement. Okay, so that person, okay, or these are retail traders, they will panic, and in the panic they will start selling. And when they start selling, then what will happen? Then these the market manipulators, okay, then they will abort the profit booking, because in that case, what will happen? In that case, the market manipulators, they need more money, means they need some support from the retail traders, because without their support, okay, they cannot move this the entire stock market or the S&P 500, okay, in the desired direction, right? And guys, see, I will not say, and I will not blame the retail traders, okay, for like whatever they do, like panic, rat race, FOMO. Okay, no. Okay, this is because the market manipulators, they put them okay, in this kind of situation, okay, so that they force them, they convince them to to react or to behave like this, and that is why, okay, they do. And the market manipulators, they very well understand this fact that without the support of the retail traders, they cannot manipulate the market, right? So it's not like that the one market manipulator, okay, he is buying and he's asking someone else to sell, and then they are trading. Yes, okay, we see this as circular trading, but okay, but even in this case also, without the support of the retail traders, they cannot do that, right? So this is why they trap the retail traders. Okay, I will not say that the retail traders they do this thing willingly. No, okay, they are compelled, they are convinced, and they are manipulated, and then they are forced, or everything is scripted in a way that not just these are retail traders, but even the technical traders, okay, they can fall into the trap. Anyways, in this the gap down open, okay, the market manipulators, okay, they might not go for the profit booking. There are very good chances that they might not go for the profit booking. In that case, what will happen? In that case, they can try to sell. They can try to sell to retest 4065, 4065, and then the 4035, and then intraday, and that intraday again a reversal, bullish reversal, because they have to give a bullish reversal in order to accomplish two things. Number one, to convince the retail traders that go bullish, the stock market is bullish, S&P 500 is bullish, go bullish. Okay, that's right. Now technically it is bullish. Number two, they need to convince the technical traders that, see, because there's the bullish root trace, okay, it has retested, okay, these are the levels, now you can go bullish. Okay, so these two things will be accomplished, but the technicals have changed. Okay, we need to accept the fact that the technicals have changed. That is why it is bullish. Okay, so yes, guys, there is one more thing, that whenever there comes this kind of movement, then what we do generally, in order to validate or in order to confirm this the movement, we wait for the two consecutive closings. Why the two consecutive closings are necessary? Okay, let me show you some good example why the two consecutive closings are necessary. This was the day we have seen one closing below the Chimoku cloud. Okay, confirmed bearish trend, absolute bearish trend, confirmed bearish trend, right? Heavy fall, done. But if we trust this movement, and if we trust this the single closing below the Chimoku cloud, then what we will say? Then we will say that now the next day there must come a gap down open or a bearish movement, right? But this was not there. Rather, what has happened the next day? Next day, a bullish candle again inside the cloud, and again resumption of the trend, right? What I'm trying to say is that always trust two consecutive closings. Two consecutive closings. There was only one closing, not the second closing. Okay, that is why we trust the two consecutive closings. Let me show you one more thing here, that why we trust the two consecutive closings. On this day, it was very heavily manipulated, okay, and it was within a day. This was like within a day, it was almost 5%, 5.55% up, just within a day, 5.55% up. Okay, very heavily manipulated. Okay, but it closed above the Chimoku cloud. Fine, we have waited for the second closing, done. It was above the Ichimoku cloud. Two consecutive closings above the Ichimoku cloud confirms that yes, now it has entered into this the short-term bullish trend. Okay, earlier it was the bearish trend, but now it has entered into the short-term bullish trend. So what it means? This means that now whenever there comes a reversal to retest this the Ichimoku cloud, then you can go and buy. Okay, so if you are my YouTube community member, then you can read the notes, or you can see the previous videos that I mentioned this thing, that now you are seeing this the bearish candle, it is the time to buy, because we are safe. Okay, we are safe, and this the S&P 500 is safe. It is the time to go bullish. Okay, so means buy this day. So they have my YouTube community member, they bought this day. Next day a gap up open, and then again upward movement, and then came down. Okay, so they booked the profit there. Then I told them that now wait, again a retest. Again, it survived above this the Ichimoku cloud, again upward movement. Okay, so back to back. So by YouTube community members, they have made a lot of money here. Okay, anyways, so what we were discussing, yes, the two consecutive closings. That why we should do two consecutive closings. So there is a one closing above the Ichimoku cloud, So if for some reason, if for all the chances are very less, chances are very thin, very less, that on Monday S&P 500 will close below 4050. The mark is 4050 for Monday. Okay. So if on Monday, if the S&P 500 closes below 4050, in that case it will be back into the Ichimoku cloud, and there will be a resumption of the bearish trend, not the bullish trend, right? Even though technicals are saying 100% bullish movement, and I've shown you there. Okay, this is the same thing. What has happened in case of that the bear trend? Okay, that time one closing, and then the next day just everything has changed completely, right? So yes. So if there comes a closing for any known or unknown reason below 4050, means a resumption of the bearish trend, not the bullish trend. Okay. Or if the bullish trend has to be there, then again first the S&P 500 has to first struggle here inside this Ichimoku cloud. Once it clears, gives two consecutive closings, then only it will be considered bullish. Else it will be not. Now the question is that if there is a bullish movement, then what will be the point of entry? What will be the point of entry? Okay, that's the important question, that what exactly, where exactly you should enter. Okay, point of entry will be the retest or retesting. Retesting, like point of entry will be, you can say at first the point of entry we can expect like 4065. Okay, but the real point of entry will come when it actually hits the Ichimoku cloud, either on Monday or on Tuesday, or or some other day. Whenever it hits the Ichimoku cloud and it holds, okay, and it holds and closes above the Ichimoku cloud, that day, that will be your point of entry. When I say point of entry, okay, I'm talking about the bullish entry. Bullish entry, okay, that will be your point of entry, a safe entry. Okay, so just like what I mentioned earlier, okay, this here it moved up, came down. This was the point of entry, and then upward movement, and so on. Now the point of exit. Point of exit will be 4150 to 4160. That will be the point of exit, because we have seen on the monthly chart, as well as I guess on the quarterly chart, on the weekly chart, and also on the daily chart, that as of now 4150, 4160 is going to act as a very, very strong resistance, very, very heavy resistance, and that the S&P 500 is expected to struggle when it moves around this particular resistance zone 4015 or 4160. Okay, and then it is expected to give up, right? So, and technically, yes, this is technically supported. Okay, once it gives up, once it comes down, and once it survives above this Ichimoku cloud, then the second time it can move up, and then in that the second time it can breach and it can move towards like 4185, 4291, and so on. Okay, so that will be considered as a technical movement, okay, where we can trust and where everyone can trade safely. What exactly is not recommended, okay, or what you should be careful of. Okay, if you are planning to enter into a bullish trade, particularly on Monday, in a condition if there comes a gap up open, in that condition if there comes a gap up open on Monday, and if you are planning a bullish trade, then wait, let these the technical indicators, okay, to cool down. Technical indicators will cool down only if the closing comes below 4110 or 4100. If a closing on Monday comes below these levels, then only the technical indicators will cool down, else no. Okay, not. So this means that if you're planning to enter, okay, because of maybe like FOMO, if the FOMO is something that affects you heavily, okay, or some other thing, okay, and if you're planning to move into the bullish trend, okay, then this is my recommendation, that you should be careful, a little careful, okay, and just be aware of this thing. And if you want to, if you do not want to lose the 10 points opportunity, 20 points opportunity, want to go bullish, okay, then just cover your trade, okay, use the stop loss, because if the profit booking actually happens, then you will not get even 10 seconds, okay, to exit from this particular trade, because okay, within 2 seconds, within 5 seconds, there will be a fall, and the fall will be and the fall can be that heavy that it will simply surpass your entry price and will bring you into the losses. Okay, So that is why, first of all, it is not recommended, and even if you want to, then use cover or use the stop loss. Okay. And rest, if you are my YouTube community member, okay, then on the daily basis, okay, I will tell you what is happening, what is expected to happen, okay, from Monday through Friday. So if you want to join my YouTube community and want to get the S&P 500 daily updates and analysis from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 opportunities every week, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. So guys, I can understand that last 3 days, okay, the S&P 500, it did not work, okay, as was expected and anticipated, and it went beyond the technicals, against the technicals, okay, and we have lost a 3% move here, okay. But again, to all of my subscribers and to all of my YouTube community members, that we have made money, okay, back to back, a lot of time, back to back, a lot of times, okay. So no need to lose your heart. No need to feel bad. Okay, this is not the end of the stock market trading. Okay, stock market was there, is there, and will be there. Right? We will get ample of opportunities. Okay, and the technicals, the market manipulators, they cannot just manipulate the stock market every day. Okay, they have to give up some day, and they have to allow the technicals to work. When the technicals will work, then back to back again you will make profits back to back. Okay, so no need to think that you have lost the 3%, and do not fall into the trap of the market manipulators. See, the trap of the market manipulators, okay, so you can relate it to the mouse trap, okay, a rat trap or a mouse trap. Okay, what happens is that there is a cage. In that case, okay, there is this small door, okay, attached to a spring, and then there is a piece of bread, okay, or a piece of butter or something to eat. Okay, now the mouse will come. Now the mouse will get attracted because of this the food that is there. This is the free food. Again, free food in the stock market, we can relate it to the free money. This is what manipulated movement, free money, right? So this is the free food, and the mouse, okay, mouse need not to do anything, okay, in order to get this the free food. Which is why what will happen? Okay, this the mouse will become greedy. Mouse will enter into the cage. Mouse will eat the food, but immediately he will realize that now he is trapped. Okay. So the same thing happens here. Now the retail traders are celebrating based on the news from the market manipulators that they have, thrown through all of these the news channels and platforms that say because nothing broke in the system, that is why the stock market is moving up. Absolutely rubbish, right? Secondly, they have convinced heavily the retail traders that see, this is the trend, this is going to happen, go bullish and this. But what will happen just like this? The mouse trap? Whatever money the retail traders they have made, okay, in last 2 or 3 days because of this manipulated move. Okay, now at some point of time, the market manipulator, they will take all of this money back from them. Not just this money, but their own, the money that these the retail traders own. Then ultimately what will happen? The retail traders will realize that they have made 10 to 20% profits and they have lost 80 to 90%, okay, their money or this thing, right? So this is again similar to this the mouse trap or this the rat trap, okay. So the stock market, okay, the purpose of building the stock market or to bring this a concept of the stock market was to make the rich richer. It was never about helping all of the people to make richer. No, it was only to make the rich richer. Okay, and they can make the rich richer only by collecting the money from the others. And guys, there is one more important thing that I forgot to tell you here. Yesterday I have launched this my website. Okay, and the name is tradingsp500.com. So the name of the website is tradingsp500.com, and also I've given the link in the description and in the comment section. Okay, so you will find a lot of the information. So you can read these the blogs, and soon I will publish more information, more blogs, okay, more information about the stock market. And also you will get the information that why the Warren Buffett says that be fearful when the stock market is greedy, and why you should be greedy when the stock market is fearful. Okay, so this is the stock market is not something that very straight that every day it will move up or every day it will come down. No, So I will publish more and more information, more and more sections. Okay. So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you want to join my YouTube community, then you can. Then I've given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask. So guys, this was my S&P 500 weekly technical analysis for the week of April 3rd, 2023. That is from April 3rd, Monday, through April 7th, which is Friday.